afternoon, guys. I hope that you're all doing well today. It's Jay here with the Academy of Forex again. So I'm just going to move into part 3 now, the trading crash course that myself and Robert's been doing over the last few weeks. I know that a lot of you would have seen part 1 as well. Now, part 1 we went over a lot to do with the order flow in the sense of the footprint, the delta, you know, a lot of the stuff in relation to the basics of how order flow works. I just wanted to also thank Robert's as well for helping me with last week's video. If you haven't seen Robert's video as well, I do highly suggest that you go back and watch that just before you move on to this one here. The reason for my absence there was just I had a few issues with the broker that I was using, which I had to resolve, so it sort of reduced my capacity to really make any videos last week. So like I said, I do highly suggest that you go back and watch those videos and sort of get the basics for order flow and what we're actually going to be going through. Now, today's video, what I wanted to do is take everyone through and introduce the TPO chart, which is what you can see here. It's also known as the market profile, if you know, you guys have heard it referred to in that sort of way. So I just want to take everyone through how I use it, what it actually does, how it's formed, and some really sort of nuanced things that you can actually do with the chart itself as well. So just to sort of touch base on the first thing, which is how the TPO chart came into existence. It was developed by Peter Stiedelmeier, and I'm sure I butchered that completely. But it was invented by Stiedelmeier in the 70s, and it was first introduced to the public for the public use in 1985 with the CME exchange. So I know in the last video I did mention the CME exchanges. That's what I trade primarily. Now, CBOT, for those who may not know, is the commodities. Basic to also mention about the TPO chart here is just what it actually stands for. So TPO merely stands for time, price, opportunity, and it's just a way of correlating all the data within the chart. So you can see that the TPO chart I have here is currently for gold. If I minimize this, you can see all of the other charts, all the the levels and things that I have on the gold chart. And it's just a way really to correlate and manage the data from the bars and puts it into this format here. So the first thing really to explain is how a TPO chart actually forms. Now, this looks quite strange. A lot of these bars look very odd, and if you haven't seen one of these market profiles before, it can look a bit overwhelming. But I can absolutely promise that it's quite easy to understand. So what I'm going to do is put up a screenshot here. Now, I actually did pinch this from the Tradeovate website, so hopefully they don't mind. But this is the TPO that once it has been built. So this is just a version really of these that you can see on the right here. And I'm just going to get one when it is building as well. So we're just going to go through these, and I'm just going to quickly try and explain in the best way I can how these work. So on the right hand side here, and I'm going to quickly grab this pen, you'll see just letters of the alphabet and then building up from left to right here. So you can see the A's, and then it moves on to B's, C's, D's, and then it will obviously go through all the different letters. Now, each of these letters here, all that will represent is 30 minutes worth of time, so one 30-minute bar. So what you'll see is that the A's represent a 30-minute bar, the B's then also represent a 30-minute bar, and you can see the levels that these prices trade at. So you can see that the price here in the A, so this 30-minute bar that's represented by the A's, it only tackled 2 different price points here and there. Then when we move on to the B's, this 30-minute bar tackled 4 prices. We move on to the next 30-minute candlestick, and it tackles the prices here and moves down. D then moves down a little bit further. So the main thing to really take away is that each one of these letters represents a 30-minute time period and the different levels at which it trades at there. Now, on this chart that I actually have on Sierra chart, now each of the, if we just get rid of these lines, each one of these bars here, these don't represent 30 minutes, these are all days. So this bar is a day here, this is a day here. The only thing that actually represents 30 minutes is the actual letters itself. So let me pull these back up here. So once the 30 minutes has passed, it'll move on to the next letter. And then another 30 minutes will pass and move on to the next one. And then over time, it will actually look to build something like this on the left-hand side here. And it would just, builds this TPO profile. Now, it doesn't usually stop around the V's, which is obviously on the right here. The V's are the latest 30-minute bar. Once it's used up all of the alphabet and it gets to the capital Z's or Z's, it will then move on to the lowercase letters. So it'll have lowercase a, lowercase b, and that is a later on time period to obviously the capital A's, and the capital B's is just obviously so it can use all of the alphabet to get a full picture. You may be wondering after I've explained this, what is this information useful for? why would we use this in trading? And again, if you haven't seen these before, if you haven't used these before, it may be slightly odd to wonder exactly what these are used for. Now, I can tell you the reason that we use these is based off of something called auction market theory and the bell curve distribution as well. So what I'll do is I'll pull up the bell curve distribution here and I'll just show everyone what this is. Now, I did actually get this off of a website that I follow religiously called Trading Riot. I'll leave a link to Trading Riot in the description. Great guy. He's got a lot of information for free on order flow, and he's got a blog as well, which I follow a lot as well. So this is just the bell curve distribution here. So once this TPO profile has been made, you can see that it has this highlighted area just here. Now, the thought behind this highlighted area works very similar to how a bell curve would work. We have the fair value line right in the middle, which is represented by that blue line just there. Now, that blue line is also called the POC, the POC, also, broken down, it's actually the point of control, also known as the fair value area. Then also you've got this top line here, which is the value area high. You may see it on my charts or on other people's charts as VAH, value area high. And then you've got the value area low just there as well. So that's also VAL on my charts on the right if you see those, or obviously if you see it on anyone else's charts, it's just the value area low. Now, the way that is described and used in the bell curve is this area just here. So you would have the POC in the middle, you would have the value area high on the left, and the value area low on the right. If you were to imagine spinning this on its side, you would be able to see, if I can do that, you would see that it matches up very well with these areas just there. Now, the reason that we use the bell curve distribution is that within this standard deviation of the first line, the middle line, and the far right line, 68% of all of the data, 68% of all the trades, and the price where prices remain during that day would fall within that first standard deviation. The thought then also being that within two standard deviations, 95% of the data and 95% of the trades would have taken place within that area. And then also if you go out to three standard deviations from the mean, 99.7% of the data then would occur there. What we tend to use this for is just to find the value areas on the chart. And I'll explain just briefly also how we use those value areas to frame trades, how we take trades around them, and what sort of prominence they actually have on our charts. Something to note also, briefly, just before I move on, there is two different POCs. Now, we do have a VPOC, and we just have a normal POC as well. Now, these are represented by these lines on the right, and also this line on the left. So if you remember a second ago, I said that this was the POC, which it is. Now, the POC is where it spent the most time trading. So price would have traded mainly around this level here, and you can see that represented by the length that this is sort of spread out. You can see that price traded around where A started the most in that day, and like I say, it spent the most time there throughout the day, so that's where the POC is formed. Now the VPOC is slightly different. That's the volume point of control, which is represented just slightly higher by this line. And that is where the most volume was traded throughout the day. So two different things. They will, form at two different places on the market profile. So it's just one thing to be careful of. I personally use the VPOC more. I'm more interested in where the orders were placed, whether the higher volume was traded rather than where it spent the most time. The reason being for that is you obviously want to know where the orders were placed. You want to know where people were looking for value, where people were placing trades. We don't really care about where it spent the most time, because in the mornings and then towards the end of the nights, when the market opens and is just about to close, it could just sort of fester around there with forming dojis, and that does have a part to play on it as well. So we would always look to do the VPOC, and that is exactly where these orange lines are as well. So I'll just quickly take you through the actual chart instead of the pictures, and I can show you these value areas a bit closer up if I make this a bit bigger. So I know that it's very, very small. You won't be able to see the letters, but you can see these bulges here, which is the build-up of the TPO, the build-up of the market profile. And if we take yesterday for an example, so this is the 18th of August, just gone. Sorry, that would be Thursday, so to be 2 days ago. You can see by the white line here at the top, that is the value area high. We have the POC, which is the orange line here. And then we also have this white line here, which is the value area low. So we can see that this forms a bell curve, like I mentioned before. We do have outlying trades here, but this is where 68% of the trades, if I can actually draw, that would be perfect, where 68% of the trading took place in the day. So this is what we would use for the value area. And to just briefly touch on some trade ideas, what would I do with these value areas? A lot of people ask. What I would see these as is sort of support and resistance. So it's not a level that I would draw on, at the tops or at the bottoms of wicks as a support and resistance area. But I would expect price, once it breaks out of these value areas, say if it was to break out of this value area high here, I would then look for a trade to go long based off of that, as we've accepted outside of that value area high. Exact same principle if we were to break out the value area low. You can see that once it broke through this level, it stayed below this level, and the next day formed this price here. So sorry, it formed this TPO chart here, which meant that price stayed below the previous value area for the day before. And also at the top, once it retraced towards this area, there was very little trading that took place around that area. If I make this a little bit cleaner. You can see here that the sort of bulge around the top here is very small compared to these areas here. And that just means that, not a lot of trading took place at this point here. It mainly took in this bell curve that was formed there. So a couple of nuanced things to note about how to trade these. I did just mention, obviously, if we have a break above or below the value areas, I would then look to take the trade in the direction that we break out. Something that I get asked a few times in relation to this is whether I do the same with the POC as well. Now, the answer to that, just to be to the point, is no. The reason that the answer is no to the POC, which is the VPOC, sorry, is because once it breaks out of here, you tend to find that it rotates within the lines of the VAH and the VAL. Now, the reason being for that is this is the where the most volume is traded in that day. This orange line here, and something that comes up a lot and something that's mentioned a lot is something called auction market theory, which is something that I'm going to bring up here. Again, this is just sourced from the Trading Right blog as well, so this is just a great explanation on the TPO and how the auction market theory really affects trading. And this is the sort of 5 rules that I would follow and the ways that you can trade each of these value areas. So you can see the bell curve on the left of each of these examples here. Now that bell curve purely is just these areas here. So you could draw these onto your TPO chart if you wanted to, if you want a bit more sort of visualization of how these work, but it is just these areas there. Now, the first example really to bring up is, if I can find that again, is how it sort of reacts in this first one. So it would break into the value area, it would come up, it would test the value area high, and then it would rotate and move down to the value area low. Again, the other example is it would test the value area low, to the high, to the low again. Or we would have a breakout, a retest, and then a move lower. Now this is exactly how I would trade the breakouts of the value area high and the value area low. I would look purely for a retest of the level. So it would break out, come back to test, and then move away. That is how I would use these. Again, same if you were to do it on the bottom, which is exactly what happened here, which you can clearly see on the TPO. As we break out, we traded here, we came back for a retest at this level, and then now we broke down. And it's quite a significant drop as well. You can see that it's probably about, 20 points of a move in the day. And that would have been a trade that I would have taken as well. But just take you through the other examples here on how it can work. If I can also just delete these here. It would move on to the POC, so you can have a bounce off of the POC, and this is exactly why I don't trade the POC breaks. Now, the reason being again for that is this is where price has been hung up the most. This is where it's been traded the most, and it sort of gets stuck typically. So I would actually use the POC mainly for targets, if anything. So if I was going to take a trade below, I would look for a take profit at the POC of a previous market profile or a TPO, which I'll show you in just a second. But I don't typically, trade the breakout of these, as it can just rotate around inside like this. So like I said, I would just target these POCs, and I'll show you an example of those in a second. Just example 5 here, you can also see it sort of rotates around the bottom before it breaks out as well. But that's not one that I see too often. So, just to take you back to the chart here, what you could do as just a trade idea. Again, I don't know whether gold is going to do this, but this is just purely an example on how you could trade this. If price was to come up and break out of this value area high here, and you wanted to trade the retest, and it came back down, took your order, I would typically place my take profit at the this POC here. Now, why that POC there is actually a naked POC. So you will see if I zoom out, typically these POCs, oh, it's a bit too far. Get a bit in there. Perfect. These POCs typically is where price gravitates towards, because that's where the most of the volume has been traded. And you'll see sometimes these can be tested perfectly. So when we had this day, and this is the 6th of July, we had this bell curve, which is very large, but we had the value area high just up here, and we had this POC that moved very, very far. Now, the thing is with these POCs, as I say, price does tend to gravitate back towards them. So we had a few weeks where price was moving lower, and then when it came back up, it tested it perfectly and sort of struggled to get over that. Now you can see that because it came up and there wasn't a lot of there wasn't a lot of time where price hung around this area. It sort of gravitated and had its bell curve here. But you can also see that this POC there also became this day's value area high. Again, another example of why price would get hung up there, and that's why I would use it as a target rather than a trade idea. Another nuance that I actually use the TPO charts for, and this is something again that Trading Riot I picked up from the blog and watching the trades over on that site, and you know what was really going on. You can actually merge these profiles together, and there is a pretty good use for that. Now, I'm pretty conservative and pretty reserved when I do this. I'd rather not, so that I can get a better picture of how things are forming. But if I give you a good example, say, I believe like this example here. So if I unmerge this, you'll see that the bell curves and the value areas of this day, and this day, they're pretty much overlapping each other. So if I get this pen, you can see that this area here, a little bit lower, actually completely absorbs and completely covers this day's value area here. It pretty much works the same way with this bell curve of where the trading took place. Falls exactly within where this day's value area was. So what you can actually do is just right click these, merge profile again, and you'll see that the 3-day has been merged into 1 day, and it has a bell curve like this. Now, what's quite interesting about this candle, this TPO here, is that this POC that it formed is actually untested. So likely going to be tested in the near future. And again, this is exactly why I was mentioning about targeting these areas. Now, price is likely going to get hung up at this area. It's 3 days worth of a value area. So again, I would look for shorts because we're going in a downward trend, but I would look to target this area rather than anywhere lower, as it could literally just bounce off of that area, as we saw in this screenshot here. If I can find it, this one here. We could typically find that it comes down, it tests it, and then bounces away, and it is used as a resistance. So this is, again, just another reason why I would target these for a profit rather than, trying to break through them. The thought again behind these value areas, just to really hit this home, is that price typically will stay within these. Obviously, there's an agreement between the buyers and the sellers that both are seeing value within this area. There are people buying it, there are people selling it. So it will typically bounce around the value area low up to the high around the POC, which is just down here at the bottom. And again, this is exactly why I would trade the breakouts of these. Now, I trade these on the 5-minute chart. So when we get a breakout, I'm looking to get in pretty quickly. And the main reason being for this is just, again, the auction market theory, what that actually is. Now, what we tend to find is that there is a balance within these areas. Again, there are buyers, there are sellers. But once it breaks out, there is an imbalance within the supply and demand sort of dynamic between the buyers and the sellers. There's a breakout, and it's merely just looking for another area of value. So say if we were to break down here, and again, on Monday, again, I don't know if this will actually be the case, but if on Monday we fall down to 1752, just there, and then there's now an agreement again between the buyers and sellers that there is value around this area, we could then see that it trades around this area. If the bell curve was like this, once the trading has taken place there, we'd find another imbalance. We could move up here as an example. Then there may be a bell curve like this. So what we're trying to do effectively is not trade so much within the value areas, because that's where we might find a range. But we're looking for the trend to really break there. So once it breaks this value area low or the high, we'd look for a breakout trade there. We would then look for it to trade in a different value area, trying to avoid trading within the value area itself, just because obviously that it would typically form a range. But once it breaks out of that value area low or high, we would then look to trade the next value area up here, and it sort of continues on like that. Now, without my pretty shoddy drawings, what we can actually see is this in effect here. So let me have a look. So we can typically find a area like this. This was the bell curve. This is where buyers and sellers found value. It broke out of this, and then it moved lower here. It then broke lower, and we had it here, and then lower again, and now we have it here. So we would typically have traded the breakout here, 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 and then also lower as well. And also try to avoid trading in the actual value areas itself, just as, again, it typically form a range. And we can see that if I was to go back to, say, the hourly chart and pull that up, we can see that it would be a downward trend with these brief periods of range and chop. So we'd look for the breakout here, then obviously wait until it's resolved the chop. You can see these areas here on my charts. These are the previous, if I don't try and cover it up with the blue pen, this is the previous value area low. The high is just above it. We would look for the break here, and it's currently going down, but you can also see these areas of range and chop, and we're just sort of trying to sort of sniper the value area breaks to look for the sort of trending move down, which would be sort of represented by a move like that. You can also see that it does get hung up at the POCs. So the POCs are also these orange lines here. So we typically look to target these areas if we want to get along, or the naked areas below, the naked POCs or the naked single prints as a target below, which we can see on my chart on the daily here as this orange line. So this would be where I would want price to gravitate towards, and then take my order out and not look for anything lower than that, as it can bounce as per the auction market principles that I've already taken you through. Just a final thought with the TPO charts here, it is just the idea that we can have false breakouts and we can have acceptance as well. Now, I don't want anyone to take away from this that we would trade every break. So when it breaks down through here, we don't immediately sell. If it was to break up, we don't immediately buy. What you can tend to find is quite a lot of rejection around these areas as well. As I mentioned before, they're quite dynamic in the sense of being support and resistance. We don't tend to trade every single breakout. We would instead look for acceptance out of that area. Now, what is acceptance? I define acceptance in my strategy as an hourly candle close outside of these areas. If there's an hourly candle close, that usually indicates short-term acceptance outside of these areas. Not always. It can also, the market can really just do whatever it wants to do, and it is just typically a coin flip on whether it works or not. To assure longevity of your account, this is why we only risk 1% per trade, and have an expectancy based on maybe a 60 or 70% win rate. Having a decent average return on your investment with your R. So you risk 1R, hopefully gain 2 to 3R, if not more per trade. So just one thing to note: we don't trade every single breakout of these levels. But we do always look for the acceptance outside of them, which is usually an early indication that we're going to be traveling somewhere else to a different price, looking for fair value. I really do hope that this has helped, and I really do hope that it's made sense. If any of you guys do have any questions, or you're not too sure about your market profile, how to set one up, whether you should be taking trades based off of certain things that you've been looking into, just feel free to hop into the Discord and send me a private message, or leave a comment on the video. I do tend to check on the videos, people commenting, see if anyone needs any assistance with this. But again, I really hope that it does make sense. I hope you have a fantastic day. And just also to plug the Patreon channel, again, we do post signals in there. We do post our thoughts, analysis in there every single day. Myself, Robert, Sasquatch, there's some really great people in there who have got a lot of experience with trading. So if you're just new to trading, you just start getting started, you're having a look into order flow trading, if that's something that's new to you, I really do recommend that you come over. If you need any guidance or any help on any of the things that I've mentioned today, or anything in the last video, just do get in contact with me. I'm more than happy to help out anyone that needs it. But other than that, I do hope that you guys all have a fantastic afternoon. And I will catch you next week with the next order flow introduction video that I'm going to be taking you guys through.